I'm gonna record this. I think this is really good stuff right here. All right, so let's continue here. If an insured purchase a 10-year level term policy that is guaranteed renewable or convertible, it's good to know. What does renewable mean?
Renew- Basically, when you renew, you're back to renew it, like
So when you renew it, is it another term or another cash value?
the cash value.
No, when you renew it, it stays as a term. So when you renew it, basically the term ended, so you renew it for another term. But it's going to be more expensive because you're older. Got it? Okay. But convertible, just think of like a car, it converts, right? So it changes, it switches, it looks different. So when you convert it, now you do change, you go from a term insurance to a whole life. So you go from term to permanent. You convert it. You see what I mean? But renew it is you just keep it and you renew the same term. So now listen to the lingo, and it makes sense to think of it like that, right?
Mm.
All righty. All right. Let's see. I'm gonna back. Okay, so any questions? All right, so right here says the insured. Go ahead. With that said, try to get this answer right. Go for it. So what happens at the end of the term? It's renewable and convertible, so they could do two things. So what happens after the end of the term?
It's higher. No, it stays the same.
Well, yeah, no, it does get higher. The premium gets higher because you're older. But look at the answer. What is the answer?
That'll be answer A.
Yes, that's true. Okay, let's find out why B, C, and D are wrong. Okay. B is wrong because why? The insured must provide evidence of insurability at renewal of the policy.
Evidence.
When it's when you see the word, you see the word right here, guaranteed renewable. Guaranteed means that no matter how your health is, it's going to get renewed. So it's guaranteed to you're guaranteed to qualify. So you don't need to go through underwriting again. You know what underwriting is?
Mm.
What is underwriting? If you don't know, I'm going to go through the whole process, okay? Because it's important for you to know what underwriting is. And it's good.
Mm.
If you've seen this before, it's good to hear it all over again, like multiple times, because it's important to know this. This is you must know the process here.
Where you like rewrite, underwritten like some notes.
I wish I could zoom in. Can't zoom in, huh?
I can say fine.
Yeah, but I wish I could. I wish there was a zoom to fit content. I wish there was a way I could zoom in. Like, there we go. But a shortcut, you know. All right. When you submit an application, you have to go through underwriting. So what is underwriting? The process of risk selection. That's on the test, okay? I'm using words that are on the test. I could keep it more simple. Basically, it's the process to see if you qualify. But really on the test, it says the process of risk selection, risk classification. So during the underwriting process, there's a thing called conditional coverage, right? Which if you die, it covers if you make the payment, okay? But so once you're classified, then your policy is given a risk classification, which is going to be either standard, substandard, or preferred. Does that make sense? All right, let's continue here. So right here it says renew the policy. The insurer must provide evidence of insurability. No, because it's guaranteed renewable. If you renew it, then you don't have to qualify. The insurer may renew the policy for another 10 years at the same premium payment. What's wrong about that?
Because it doesn't the premium doesn't stay
The
exactly the same
yes,
when
the
you
premium
go
goes up because why?
when you get older
Because you're
and
older. That's it. So it doesn't go up because of the economy, because of inflation, because of your health. It doesn't matter. What matters is your age. Okay. D says the insured may only convert the policy to another term policy.
no, because it doesn't work that way and converting to another
When you convert it, it goes from term to what? From term to term? No, it goes from term to permanent. So it goes from term to whole life. That's what makes D wrong. Does that make sense? What if it would have said the insured may renew the policy to another term policy? Is that correct statement? Yes, exactly. Yes. You see the difference? So you got to catch the words renew and convert. Convert is to a permanent, renew is keep it the same, but it's going to be more expensive. So the answer is A. Okay. Policies that are guarantee renewable and convertible may be renewed without evidence of insurability to another like um term and maybe converted to permanent insurance without evidence of insurability. Any questions on this, guys? I know I see you guys studying with me, so this is good. No questions? All right, let's keep going. Graded premium, whole life policy premiums are typically lower initially. Graded premium, we're going to talk about that, okay? Graded premium. So let's look at graded premium. I got you guys. Bam. It's it's right here. Oh shoot. Zoomed in a lot. Give me 1 second. There it is. All right. So graded premium is basically a type of whole life. Graded premium is right here, the black one. Not the top one, but the bottom one. So the premiums on graded premium start low, lower than the regular level premium. Okay. So it started low, but then at a certain point, at a certain age, you don't need to know the age in the test, okay? They just want you to know that at a certain age, the premiums start going up gradually. So the word, hence the word graded, gradually graded, gradually graded. You see what I mean? So remember that when you hear the word gradually, I mean when you hear the word graded premium, it means that it gradually goes up. Not all of a sudden, it's like little by little by little by little. And then it goes flat till age 100. Okay? Might as well learn the other one. So that's graded. Modified is it also starts low, but then all of a sudden at a certain age, it just pops in 1 year to a high premium. And then it stays fixed for life. I mean, to age 100. Again, its whole life is to age 100, always. Is universal life till age 100, guys? No. Universal
No.
life,
No.
universal life, it depends because it's flexible premium, so it's going to depend on how much premium they put in. But whole life is always to age 100. All right. Now look at the red one. The red one is called limited pay. En español, pagado limito, pago limitado. So limited pay means that their premiums are going to be higher. As you can tell, it's higher than the green one, higher than regular premiums because it's charging higher premiums because the premiums are gonna end soon, and then it's gonna get paid up before age 100. And then what do they do from that point to age 100? Once it's paid up, they just don't make any payments anymore. And then the policy, what happens at age 100? It matures, it endows because it's paid up. Make sense?
Yes.
All right. And then there's a fourth one. So far we got level premiums, green, graded premiums, black, modified premium, black, limited premium, red, and then blue right here. Look at this. You just see a big old blob right there. This is called single premium whole life. Single premium means that they just gave one payment and that's it. It's paid up. One big payment and bam, it's paid up. So that what does that mean? That means they're not going to make payments until age 100. Okay? So all of them are to age 100. At age 100, what happens? What's the word? Matures and endows.
Okay.
And what happens when the policy matures and endows?
It's
The
paid.
policy terminates, huh?
Is that the same as policy maturity?
Yeah, policy maturity. So what happens is that at that age, the policy terminates and the client receives the face amount in cash value. The face amount in cash value. Got it?
Mm-hmm.
All right, let's go back to the question now. Graded premium whole life policy premiums are typically lower initially. That's what I just said, right? But gradually increase in years 5 through 10. After the period of increase, the premiums will do what? Remember the visual. What will they do?
Be leveled out.
Yep. B, remain level thereafter till age what?
100.
Till age 100. Exactly. Good job. There it is. You see that? So this is for somebody that wants a whole life, but they can't afford the initial high payment. So they want to start low. They're still going to pay the same amount, but they're going to start low and then it gets higher later. You guys get it. My daughter says that I repeat myself all over, but as a teacher, that's what I do, man. That's what teachers do. Because repetition is a mother of memory, and I need to repeat myself so you guys get it. Okay. So I don't mean to be like annoying, but but I just want you guys to like repetition. Okay. It does. All right. Number 4. To sell variable life insurance policies, an agent must receive all of the following except. Okay. Timeout. When you see the word variable right here, what should you be thinking about? Variable right here. What should be going through your mind? What does it mean when you see the word variable? What does it mean to you?
Doing many options.
Variable, many options. Okay. Yeah, use common sense. He used common sense for that, right? Tell me more.
Oh,
Huh?
hey, can you meet on me one-on-one at 10 p.m., 8
Say that
o'clock your
again?
time? Can you meet on me one-on-one? Because I got 30 minutes left to get my 4 hours. Can you meet with me at 10 p.m. my time?
Oh, heck yeah, let's do it. Let's do it.
Right, right. I'm gonna log off.
All right.